right, welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. We're having a good day here. We got a reason to celebrate. Old Jazz Wealth arose from the ashes of having nothing under management, and we have officially hit $100 million under management. And we talk about money a lot with customers here in our Wine and Wealth classes, like we'll have tonight. But man, it's been a lot of sort of hard work. Taking a little bit of work and effort and stuff. But we do thank you guys for all your support. Wouldn't be here without you. We were, of course, grinding away. You know, if you've watched the show here for a long time, that we try to give you everything we got and try to focus on the stats, the education, try to be that financial advisor that actually wants to teach and really doesn't play golf or could try, but wouldn't be very good at it. So do appreciate that, guys. Really awesome. So big little bit of a celebration here for us. And I don't know what to say. I mean, I remember when we had like, $8 million, family and friends and stuff, and we thought we were highfalutin, good people then, and just kind of took off. So very happy for that, very thankful for you guys. And so because of that, I got a good show for you here today. We're going to cover all kinds of good stuff. If you're joining us for the first time, this is just a quick stock market update. We are financial advisors. We manage our own portfolios. And so having about 740 different positions in all of our different portfolios, we're always kind of researching stuff, things that may be going on with the different stocks. And so a lot of times I have, something to offer regarding those stocks because we study them all the time. It's pretty much what we do there. And so we'll start with the market. If you look off to the right-hand side of your screen, you see a whole lot of nothing. There's just kind of a calm day overall. It was actually quite back and forth. So I called it the jello on the plate sort of thing because, we're up a little bit, down a little bit, up a little bit. And if you had jello on a plate, it would just sort of bobble around and never really get anything done. That's what we had today. So I'll start with the Nasdaq here because I believe the Nasdaq was your best performer today, and even after hours a little bit. Little gain on the day, now up about 4% year to date. Totally driven today by the same names, your FANG stocks. Well, a lot of the FANG stocks. Facebook up 2% on the day. I think Apple was the biggest contributor today, up 3.6%. And I want to point out Amazon. There you go. It's maybe waking up. I know we've said that a few times. Like it seems like it wants to get going, but today's certainly exciting to see that continue its move there. Those were your biggest contributors, but I want to put Intel in there as well. Big move on Intel, 6.5% there with the earnings coming out there, and it really helped out the semiconductors today. If you look at the SMH, this is the semiconductor, one of the ETFs you can use, probably one of the more popular ones, up 1.5% on the day, refusing to pull back. And if you look at Intel, plus NVIDIA, right? That one had a good day. And also Taiwan Semiconductors, which has been on a tear since earnings there. These three stocks make up about 25% of the SMH. So let's just back this up a little bit, right? There we go. It makes up about 25% of the semiconductors. So very helpful today that Intel was one of the bigger movers. And so that's the reason you see the semiconductors holding up today, looking pretty good. In the Nasdaq there, you got PCAR. We say PCAR because that's how you would pronounce the symbol. That is not how you say the name of the company. But up 10% on the day. It was the biggest gainer. Think of, these are the guys that make and sell Kenworth and Peterbilt trucks. You've seen them out on the streets there. And what they had today in the news, which you could see, obviously very helpful, big volume and everything. They partnered with Aurora to start making their semi-trucks autonomous, right? Just self-driving semi-trucks. And so you might remember Aurora, they bought Uber's self-driving division. So they've got technology and everything. They're not like a no-namer out there. And that was the biggest gainer in the Nasdaq. If we move on over to the S&P 500, about 3% year to date is where we stand on the S&P. It's up almost exactly the same amount that it was on this very same day last year. A little spooky, right? Because we know what happened, shortly thereafter. But you got the S&P pushing about 3% year to date. Earnings were mostly the reason for everything that caused the sloshing around today. You got United Airlines there moving a little bit lower on earnings, 5.3%. Discover Financial pulled back just a little bit from their earnings. Union Pacific, I went over the whole list with you yesterday. The average stock price reaction so far, and it's early, this is very early here in earnings season, the average stock price reaction so far is negative 0.14%. So in other words, if you took them all together, right, the average move is to the downside. downside for the earnings season so far. It's very close to zero, so it's likely going to wiggle around a little bit more. Also, we have a whole lot of earnings coming up here, so let's start with that. Here's the charts I've been sharing with you throughout the week here. Because it was a holiday week, we're going to have a few names to report on Friday. Normally Fridays are pretty quiet, but in the dark gray here, you can see the list of those stocks that are going to be reporting. We're going into airlines, like I mentioned yesterday, American, you got Boeing in there as well, JetBlue and Southwest, some of the bigger ones, well actually the only ones that will be reporting tomorrow. Notable names will be Boeing, that'll get a lot of attention. The last of the regional banks, you got Regions Financial. I thought you had one other one in there somewhere. I guess it's just Regions was the last of the sort of, call them like the mid-size regional banks in there. I think MarineMax is interesting. You're going to have Intel. Well, Intel's already out. That's on the wrong thing. And some of the energy stocks there. So Schlumberger, I think, was the bigger one. SLB is one that's reporting. So a handful of things to look at tomorrow if you're interested. Skyworks is your semiconductor stock that is the most volatile, or one of the most volatile out of the group. MarineMax, your small cap stock, is the most volatile and doesn't have the best of results there on earnings. Citrix, I believe, is the best in terms of beat rates. Well, Teledyne technically is always beaten. Citrix comes in second. What was the other thing I was going to share with you? Your best average performer is MarineMax when it is positive. So a bit of a coin flip there if they're going to report good earnings or not. But when it is positive, you've got a decent move here, 2.5%. Up here at the top, you can see the average full day performance. Also Teledyne in there looking good, and Skyworks, some of the bigger performers. So you got a little bit of volatility to take you into the end of the week, and certainly enough to focus on if that's what you like to look at. All right, moving on here, you got the Russell was your weakest of the day. It's okay if the Russell pulls back. We covered this yesterday, the Russell gaining the most in 3 months that it's ever gained after being positive already. So I shared that data with you yesterday. It's the only time that's ever happened, right? Looking back to the early 70s, as far back as we can go. And so you got to expect that this thing is hinting at a pullback there. Today, it was the value area. So they call them factors, right? So if you're looking at the index, you're looking at the top, right? You're saying, I'm looking at the index to see how things did. It's my general barometer of the market. Then you can go into sectors of the index. Then you can go into indices. Well, you can also group them by factor, which is just a fancy way of saying, are they value stocks? Are they general core, like kind of index stocks? Or are they growth stocks? And so today, whether you're looking at small, mid, or large cap stocks, all the value stocks started to pull back. Totally okay, because you know those have done really well recently, so not a big deal. We'll see what happens there. Going over to look at the individual sectors. Here we go. So we're going to see at the bottom of the list here today, this is in our dojo if you're a customer want to take a look. Energy at the bottom of the list, finally pulling back, or starting hopefully to pull back at least a little bit to give everybody a shot. Also, financials have had a bad performance in terms of their earnings results. So the average price reaction to earnings has been negative, continues to be negative. So that's one to point out there. And at the top of the list, you've got that shorter term rotation into the tech space and communication services, which a lot of us would argue is kind of tech in general. So you look at the XLF, that continues to pull back. We're going to cover a little bit of this later. Discover Financial hit highs yesterday, reverse course today. Some of the news from their earnings, I actually just spent some time looking through this. Pretty interesting because this applies to a lot of the credit card processors and companies, and there's still a few left to report, right? Credit card charge-offs came in at 2.63%. That's down about 0.75%. 30-day delinquents or greater came in at 2.07%. That's down 0.5%. Student loan charge-offs came in 0.71. That's down also. Personal loan charge-offs, because you know they do those too. This would be the ones they have to write off because people didn't make payments. 2.79, that one's down the most, down 1.47%. In other words, I thought those were really, really good numbers considering this was supposed to be a virus that just devastated the economy. That shows that the cash flow issues that the average consumer is having, not as bad as others had predicted in the past. They've also lowered their loan loss provisions. Remember when the virus hit, all the banks said, we're going to have to put aside billions and billions of dollars because we're assuming that people aren't going to be able to make their payments because they've been shut down. Truist Financial was one that I think they reported today, also said the same thing. Banks are bringing down their loan loss provisions, meaning they don't think they need as much to write off some of these loans, and those numbers there kind of prove that for you. All right, looking over here at the, I want to point out the semiconductors real quick, because they just didn't pull back, right? So holding up near highs, you've got that topping kind of a pattern where you have volatility at the highs there, but if I could just show you something real quick, a different way to look at it. Take a look at this. So here is the relative performance of the semiconductors versus the Nasdaq. In other words, don't let me scare you. This is the performance of the Nasdaq and the semiconductors in the same sort of grouping. What we're looking for is that divergence. How often did the Nasdaq go up and the semiconductors go down, or the other way around? So you can see we're hovering around the zero line here. And what do we have? We have all of a sudden this big spike. This was yesterday. So you get this big spike to the downside, meaning that was the widest spread between the Nasdaq being up and the semiconductors being down that we've seen in quite a while. In fact, if I zoom out, I don't know if it'll let me zoom out here, but it's the largest that we've seen since the virus hit, right? We all kind of just fell apart there where the semiconductors were still moving lower and the Nasdaq had already started to bounce. Well, when you see this, right, this has only happened 15 other times. If I were to keep zooming out, you go 1, 2, 3, 4, only 15 other times. The average performance over the next week is a loss of 1.2% when the semiconductors lead the push to the downside there. Over the next 3 months, average performance is negative 3.76, and next year, minus 23%. In other words, when the semiconductors start to pull back and the Nasdaq is trying to float higher, the average performance is to the downside. So maybe something else to get you excited if you're one of those looking for a pullback or something like that. All right, we'll take a look at the home builders here. So we'll go over to the home builders. I noticed these were strong today. Every day, I always look at all of our positions and all of our portfolios, and I noticed today that the home builders, they were just kicking it early today, man. Oh, no, I'm sorry. That's Moody's. That's not going to be the one. I was trying to type a H. You got things like MI Homes. This one we happen to own. It broke out today. Very excited to see that. Go through the list there. You'll see like Toll Brothers is almost hitting new highs there. The entire list looking good. Why is that? Housing starts. Housing starts came out today, and they beat by over 100,000 units, mostly, all the single-family units there. If you're not familiar, when they release the housing starts numbers and building permits come out also in the same day, when they release them, they break them down by whether it's single-family or multifamily, apartments and things like that. And then they break them down by area, Northeast, the South, the Midwest, and the West. And so they break them down like that, and we beat by 100,000 units. That's only, that's the third time in a year that we've done that, but this has only happened 11 times where the spread between what was expected and what actually happened was greater than 100,000. So really, really impressive there, and all of the strength came in the single-family homes. I'm looking everywhere, and I do not have it in front of me, but all the strength came into the single-family homes. Multifamily starts were actually down, but they've just had this rocket ship type run there, building apartments all over the place there. So they're down. Also, building permits, meaning applications to then go build these homes, which are considered future housing starts. They were also very, very strong for single-family units. That's good for the home builders. So you look at the home builders today, you go, what happened? Why'd they take off? It's obviously really good time to be a home builder there, and other than maybe rising labor costs and potentially having to pay higher minimum wages, all is looking good for them. The Northeast was the only area that saw a downturn in terms of single-family homes. So what would you do with that information? Think that through a little bit. We've done research posts on this in the past in our research site where we say, okay, let's think about if there's weakness here in the U.S., well, what companies have the most exposure to that area? If there's weakness over here, is that a problem? We did that with Cracker Barrel, I think, too, to say, is Cracker Barrel in trouble because of all the shutdowns? Well, no, because their stores were mostly in states where there really wasn't many shutdowns or there was greater limited capacity. So you start doing that kind of research. So often investing or picking stocks and stuff is less about what you think is exciting and just going through a little bit more just to see what's going on inside of that. What else do I have here for you? We did Costco already, right? Yeah, that can come off. So that was our stats play from the other day, up over 1.2% into 5 days. So we can move on. And today on our watch list, here is what we're going to do. We're going to look through stocks. So today was a flat day in the market, right? We have an otherwise strong market that today showed us Nothing. We can't say it was really strong like yesterday. We can't say it was really weak like last Friday. We can say that nothing really happened today. So what you want to do is say, okay, consumer staples, we talked about those areas pulling back, energy, and maybe financials. Now on these days, what you want to do is go look into those sectors and say, show me the pullbacks. I want to find stocks that were otherwise strong that are just pulling back because the sector's pulling back. It's just money coming out. It's not panic, it's not fear, it's not the end of the rally. It's just money coming out for a minute because people recognize something else is exciting. It's the old silver spoon theory there, shiny silver object thing. All right, so we're going to start with a couple here that have been pulling back. You got Apache down today, energy in general just down today, so a lot of these stocks pulled back. You have an otherwise strong stock off the lows here that's just recently pulled back. You got some technical support in there. You have a little profit taking. Notice the volume is not crazy. Nobody is panic selling. It's just a normal, cool and calm pullback. Sticking with energy, you got ConocoPhillips there. Now, I won't say the same about volume here. This one loses a point for that. A little bit more pressure to the downside, but pulling back to an area where you just know people are saying, if I could have bought it there, I would have bought it there. Man, if it just comes back, I'll buy it there. I want to be in energy, but I don't want to pay up. So if it pulls back, I'm interested. So that's another one. Moving on to the banks here. You got Cincinnati Financial, a little bit more volatile. This stock can be volatile, careful there. But this stock broke out here recently, good technical pattern, got started, and then the sector just decided to respond negatively to earnings. Now, they'll have earnings coming up as well, but as this pulls back, you go, great, there's technical support there. I'm in a sector that's just temporarily pulling back. Can I buy at a discount, or should I wait for it to start to bounce, and then I'll take advantage there? So not easy to buy pullbacks, but if you're like me and you're that counter trend person, you're going to like these. Norfolk Southern here. Actually, you could look at a lot of the rail companies here. Otherwise, very strong. You would say stronger than the sector and stronger than the industry, I should say. And just pulling back. Inside of an uptrend, you got a nice pullback. It's just ebbing and flowing, right? There's nothing to really panic about. There's no extra volume, nothing weird there. State Street, I should have stuck with those all in one group. Another financial here. This one's more volatile. You can compare the two real quick and say Cincinnati Financial, a little bit slower, still showing some volatility there, but now we got State Street. You got more gaps up and down here. You got larger pullbacks, larger rallies. So if you like the action, that sort of day-to-day fun back and forth, $3, $4, $5 moves, then you might look at State Street. So pulling back in the middle of an uptrend here, got a lot of technical support in this 75 to 73 area. You're looking for a reversal there if you like that sort of thing. All right, you got Henry Schein. Schein is how I guess Germans would say it. I'll get rid of this here. You got a pretty strong uptrend here and a very textbook type pullback. These guys do, if you don't know, in the S&P, they do mostly dental supply. Like dental supply is like 65, 66% of their revenue. So just think of them as dental supply. The cool part about them, if I could just share a little cool thing with you here, they have a small piece of their business which is they consider digital. And so what these guys are doing is saying, we sell dental supply products. We obviously have a lot of contracts. We're doing really well there. But their digital side of business is a way for them to increase what you would call services. It's kind of like when Apple said, we're selling iPhones, we're selling computers and stuff, and now we want to sell you apps, and we want to generate revenue from services, the card swiping and all that great stuff. Margins are better. Problem is with these guys, there's going to be some competition. IDEX, we've gone over IDEX a couple times. This would be their competition here, and they're performing a little bit better. So the question for something like HSIC is, as it pulls back, it's a trade. It's just a trade off technical support in the middle of an uptrend. But if you're thinking it's an investment, then you're really banking on them being able to increase the digital side of their business. It's going well, right? I think last quarter they were up 5.something%, 5.1% or something. In that digital space. So it's growing, maybe not as fast as you want, but if they can continue to execute on that, then maybe you got something you like. Nucor here. A lot of people have asked me about this for the infrastructure type play, but really the reason this is doing so well is the auto sales right now. So obviously a steel provider, they make rebar and they make stuff that goes into highways and bridges and all that great stuff. But right now the excitement for them and the revenue sort of growth has to do with the automobile sales. So if that gets a little bit weaker, you got a reason to maybe have some concerns there, unless infrastructure comes in and somehow they participate, which you would expect that they will. Anyways, the technical patterns here, nice little pullback in the middle of an uptrend back to the 50-day moving average, and the stock has shown you numerous times that it likes the 50-day moving average. See? Not my opinion, it just shows it to you each time. So somewhere in this range, if it just kind of hobbles around a little bit, you find yourself maybe interested in a stock like that. All right, a couple more things. Let's go to stocks in the news, and then I'll take your questions if I can, see what I can answer. Today, you have, Pfizer. So Pfizer in the news again. They, I believe, who was it? Thailand or somebody. They got a deal for their vaccine over there. So another one there. Really not moving the stock all that much, though. It's been impressive. A lot of decent news for them lately, and it's not moving the old stock. Netflix, basically a little bit lower today after the great earnings yesterday. They've got something called the Shuffle Play feature. I don't know why that would move the needle, but that was in the news today. Going over here, so if you like the Golden Nugget, this is the Golden Nugget gaming stock, something we don't normally talk about. They were in the news today because they got approved in Michigan for their online gaming sportsbook kind of betting thing. I believe it starts tomorrow, actually. So it's not a normal name brand one that people look at. I just thought that was interesting that I pointed out, maybe something different to look at. You got Alcoa down 12% on the day. They beat by 19 cents, revenues better than expected, and even said China demand in China is expected to pick up. However, I guess it wasn't enough there. That's a big decline there. I think you let this settle in. It's a good stock. It's obviously been performing well. A little overpriced in the short term, kind of behaving like the financials, where they're getting sold on otherwise decent earnings there. And so maybe somewhere in the mid to lower 19s is where this settles down. We'll see what happens. Okay, and then Spirit Aerosystems actually didn't really move. Got an upgrade today from Credit Suisse to target to $50, but the problem here is if you look at these analyst upgrades, it really bugs me sometimes how they say, so-and-so upgraded the stock to 50. All right, well, tell me the notes. What'd they say? What's the research? Give me the good stuff there. Today, what happened is they just raised it. They raised their profit target because they had to. They had a profit target of 29. Obviously, they were wrong in the short term, and so they're saying, okay, now 50. So they're trying to play catch up. So really, that's probably why a whole lot didn't happen there in terms of that. All right, let's see. What do we got? Earnings and maybe some questions. If you have some questions, feel free to post them while the stream catches up. Tomorrow, Schlumberger, Regions, Kansas City Southern, Huntington Bank, Ally also. And you got dividends coming out. Colgate paying out 44 cents. That's really it as far as going into the weekend there. So take a shot here and answer your questions. Yep. Don't all stocks say they're growth stocks? Yeah. I think if you run the company, you're like, yeah, we're a Jazz Wealth, yeah, we're a growth company. Yeah, that's totally. What CEO would be like, no, we're more of a value. I don't know. Things haven't gone so well. You like Chewy, still some room to grow. All right. That's obviously been a very popular one there. I think in the short term, you have your sort of topping pattern. It's a great example of what I'm trying to point out in the semiconductors. So when you start to get extended, notice how each day, don't just look at the pattern there, look at each day. Big up, big down, big up, big down, big down. Started the day strong, then finished not so strong. Big down day, that's that topping thing. Where you don't see the consistent day in and day out, boring uptrend with the occasional down day, a little profit taking or option exercising or whatever. You see this. This is that volatility of a short-term top. Now, long-term, obviously, you probably know where the company stands and what they're doing, and hopefully that goes really well for them. But in the short term, you got question paying $105 for this stock. I would think. Yep. I love it there. What do you think of Citrix? Beats on earnings, analysts raise price target, but big sell-off. That's the problem with these earnings right now. The bar being set just a little too high. We saw that in financials. Hopefully we don't see that as we bleed into retail and stuff, because then the narrative changes to, is the retailer done spending money? But of course that would have been based on last quarter's news, but they'll find a way to make it seem like that's happening now. Yeah, Citrix down 4% on the day, and otherwise a pretty beaten down, out of favor stock. That's the trouble here with this one. You don't mind so much if your stock is trending higher and then it falls on earnings. You figure, all right, just a little overpriced, earnings weren't as great as everybody thought, and so it's a little repricing in there, no big deal. You don't like to see that with stocks that are already discounted, right? You want to see that they're finding fair value with the earnings that are reported there. So I don't like that one so much that that happened. Yep. I love it. I love it. The Biden slump. We'll see. We will see. Give the man a chance to get in there and shake some trees and stuff, right? What is this, day 2? Was the inauguration yesterday or?
Day 1.5.
1.5. Okay, give him a chance. Let's see if he can give us that pullback we're looking for. I don't think it matters who the president ended up being. I think most of us are all standing here going, little pullback would be nice. We'll take it. Whatever. Yeah. If you own a own a Vanguard SP through Vanguard, they charge 0.4. How do I get charged fees if I own it as ETF VU on Robinhood? The fees in ETFs are taken out of the ETF themselves. So every day a little piece of that fee comes out. That's why there's not something that tracks perfectly. And so it just comes right out of the price. So if you owned it at something at $20 and the markets went up, the next day maybe it's at 2010, but it should have been at 2011, they take that penny. So it's perpetual. Yep. I love it. You'll try most food to draw the line at the bugs and other creepy stuff. I saw that. Yeah, I don't know about that, man. I've seen the ones with crickets and stuff. I mean, it's intriguing, but yeah, why? Why are we doing that? That's weird. We still have 20% cash, almost 25. Yeah, actually. Slowly taking it out there. I love it. Oh, DVN. I did see that. I didn't get to answer that question there. So Devon's pulled back here. All of them. They all pulled back. No big problem there. This obviously has had a good run. You want it to pull back. For being a cheaper stock, that's maybe a little bit more than you like to see it fall in one day. Let it settle down a little bit. You can see today's move here. That's a above average move, so no need to go diving into something like this right away. You let it settle down, give you a few up and down days. Hopefully it just goes sideways or something, and then you get your opportunity. Yeah, that would be cool. What was the question there? Why doesn't the market do better under Democrats? Depends on how you look at it. We've done that class for customers to show both sides there, and it depends on how you want to look at it. There's always a way to skew the numbers depending on your bias, of course, but we just laid it all out to just say, take it for what it is, but here's how the markets perform. And there's a slight difference. Yeah, there definitely is. Yeah. Stop the Keystone Oil Pipeline. Yep, that hopefully helped the pullback there just a little bit. So we don't know. Is he for fracking against it? Remember the whole thing with that, right? Like, just politicians in general. It's like one day this and that. Like, come on, make a decision, own up to it, and let's just see what happens. Yeah. Oh boy, we're gonna start the politics thing. Well, we've got 4 more years of that. So whether you like what's going on now or you don't, one way or another, it's going to be in the news. All right, did I get everything here? We put so much into these shows every day, and then when I miss something, I feel so bad because I got it. I did everything today. We're going to wrap it up there and get ready for our class tonight. Wine and Wealth class tonight. Come hang out, grab a drink with me. If you're one of our customers, I'm going to show you how to potentially use your tax return to get more back than you would normally get if you just reported your IRA contributions there. So it is getting into tax season. I think it starts in a couple weeks. And so we're going to start playing some games with some of those legal games with some of those tricks there. So join me later back there in the speakeasy, and I'll see you there. Enjoy.